In this session, we'll see costing for hospitals. ABC Hospital runs a critical care unit in a Hyatt building, and this critical care unit consists of 35 beds, and 5 more beds can also be added if required. Rent per month is rupees 75,000. Supervisors are 2 persons. They are drawing a salary of 25,000 per month each. Nurses 4 persons drawing salary of 20,000 per month each. Ward boys 4 persons rupees 5,000 per month each. Doctors are paid rupees 2,50,000, and this is paid on the basis of number of patients they attend. So this payment of 2,50,000 is not fixed, it's actually variable in nature because it depends upon the number of patients. Okay, and it also depends upon the time that is spent by them on patients. Then there are other expenses. Repairs, it is clearly mentioned, it is a fixed one, 81,000. Foods to patients, it is variable, 8,80,000. Then other services to patients, it is also variable, 3 lakh. Laundry charges variable, 6 lakh. Medicines variable, 7,50,000, and other fixed expenses 10,80,000. Administration expenses allocated is rupees 10 lakh. Fine. It is estimated that for 150 days in a year, 35 beds are occupied. So full capacity is 150 days only, and for 80 days only 25 beds are occupied. This hospital hired 750 beds at a charge of rupees 100 per bed per day to accommodate the flow of patients. So when they would have hired this 750 beds? Only when their capacity is full. That is, for 150 days they were full. So in that period, to accommodate additional people, they have hired 750 beds at sea to accommodate the flow of patients. However, this does not exceed more than 5 extra beds over and above the normal capacity of 35 beds on any day. Yeah, that is clear, because in this 150 days, if they have taken 5 beds every day extra, then it is actually 750, because for 150 days you take 150 days multiply by 5, what you get is 750, and for that they have paid 100 per day. It means they have paid 75,000 for this purpose. What you are supposed to find? You are required to calculate what is the profit per patient day if the hospital recovers an average of rupees 2,000 per day from each patient. Number 2, you should also find out what is the break-even point for the hospital. So how will you find the profit per patient day? You have to find out what is the profit, okay, and divided by the number of patient days. And how do you know the patient days? It is simple. See, for 150 days, how many beds are occupied? 35. And for 80 days, how many beds are occupied? 25. So simply multiply and add them, you get. So working note 1, calculation of number of patient days. 35 beds is for 150 days, that is 5,250, and 25 beds is for 80 days, 2,000. But in this calculation, let us not forget there is also extra bed of 750. Add all the 3, you get the total. This 8,000, that is the total of all the 3, 5,250, 2,000, 750. This 8,000 is nothing but patient days. Okay. Next, let us go and find or prepare the statement of profitability so that we can find out the requirement of the question. That is, you have to find out profit per patient day. Let's get started. So we'll have this table, particulars, 2 columns, amount like inner column, outer column. If you want to find out the profit, capture income, capture all, cost, so that you can find out the profit. What is the income for the year? How will you find out the income for the year? We know it is 8,000 patient days, and per day 2,000 is being recovered. So it is rupees 2,000 per patient day into 8,000 patient days. So what you get is 1 crore 60 lakhs. So this is your income. Fine. Now let's focus on the expenses, and we'll divide the expenses, that is a cost, into 2, variable cost and fixed cost. What are variable, what are fixed? Already it is clear in the question. Let's go and visit them. If you look at rent per month, this is fixed. Supervisor's salary is fixed. Nurse, ward boy salary is fixed. Whereas doctor salary is variable because it is paid on the basis of number of patients attended and the time that is spent by them. Then repairs fixed, food to patients is variable, other services to patients are variable, laundry charges, medicines are variable. Then other fixed expenses given, administration expenses allocated is given, those two are fixed. So let's capture them one by one. Variable cost, the first one is doctor fees, it is 2,50,000 per month into 12 months, it is 30 lakhs. Then food to patients is variable 8,80,000, other services variable 3 lakhs, laundry charges variable 6 lakhs, medicines variable 7,50,000. As far as the bed hire charges, let us not forget that, okay, and it is only for that 150 days. 150 days into 5 is 750 beds. 750 into 100, it is purely variable in nature, 75,000. So if you add all this, you get the total variable cost, which is 56 lakh 5,000. Then let us also capture the fixed cost, but before that let's find out contribution. How will you find out the contribution? Take this income, subtract your total variable cost of 56 lakh 5,000, you get contribution. How much is your contribution? Your contribution is 1 crore 3 lakh 95,000. Now let us deduct all the fixed cost. The first one is rent. As far as the rent is concerned, what information you have? It is 75,000 per month. So multiply it with 12. Supervisor's salary, it is 25,000 for one supervisor. So there are two supervisors. So it is 25 into 2, 50,000 multiplied by 12 months. Similarly for nurses, 20,000 into 4 into 12. Ward boys, 5,000 into 4 into 12. Okay. So that is the understanding. Let's go and capture them. Rent 75,000 into 12, it is 9 lakh. Supervisor 2 into 25,000 into 12 is 6 lakh. Nurses 4 persons into 20,000 into 12, 9 lakh 60. Ward boys 4 persons into 5 into 12, 2 lakh 40,000. And repairs, of course, fixed, given directly in the question. Other fixed expenses also given 10 lakh 80,000. Admin expenses allocated, so we need not do that allocation and all, it is already allocated 10 lakh. So if you total all this, you get what is your total fixed cost. How much? 48 lakh 61,000. So from this contribution of 1 crore 3 lakh 95,000, subtract your total fixed cost, what you get is profit, which is 55 lakh 34,000. Okay, so we have derived the profit, but what is the question? You have to find out what is the profit per patient day. How will you do that? We'll do it here. That is, our objective is calculation of profit per patient day. See, again, let's make it clear. It is profit per patient day. Let us also find out contribution per patient day. What is the contribution we have derived? 1 crore 3 lakh 95,000. How many patient days are there? 8,000. So total contribution is 1 crore 3 lakh 95,000. Patient days are 8,000. So contribution per patient day is 1 crore 3 lakh 95,000 divided by 8,000. And how much you get? You get like 1,299.375. That is 10395,000 divided by 8,000. You get this. But the question also wants you to find out what is the profit per patient day. What is the profit? 55 lakh 34,000, right? It is 55 lakh 34,000. If you divide that by 8,000, what you get is 691.75. Let me capture that. It is 691.75. And what is this? How I derived this? This figure divided by 8,000 patient days gave this 691.75. And what is this? This is profit per patient day. Okay, fine. Then there is a second part for this question. That is, you have to find out what is the break-even point for the hospital. You know the contribution. Through contribution, you can find out the break-even point. Let's see. Break-even point. Here you can express that break-even point in terms of days. You can also express the break-even point in terms of the income. Okay. So first we'll say break-even point in terms of patient days. We are going to say break-even point in terms of patient days. And how we are going to do it? We'll take fixed cost, we'll divide it by contribution per day. Simple. How do you know the contribution per day? See, contribution per day, that's what we derived here, right? Probably it is for this purpose this contribution is derived. Fine. 1 crore 3,95,000 is the contribution. Patient days is 8,000, so you get 1299.375. Divide that from fixed cost. Fixed cost already we derived here, right? 48,61,000. So 48,61,000 divided by 1299.375, you get 3,741 patient days. That is, when you have 3,741 patient days, what will be your revenue? That is 3,741 patient days into 2,000. Let's see what you get. 3,741 multiplied by 2,000. What you are going to get is 74,82,000. Fine. This is your turnover, okay, or this is your income. And what is your PV ratio? Let's link the PV ratio. Contribution is 1 crore 3,95,000. Divide that from turnover of 1 crore 60 lakh. So I am dividing that. So when I do that, let's see what I am going to get. Let me repeat. I just missed it. 103,95,000. I am using my calculator now. Divided by 160,000,000. So what I am getting is 0.6496. That is the PV ratio. So if I apply that PV ratio on this, I'll get contribution that will be equal to fixed cost. So let me multiply with this, that is into 0.64, it is 6496. So let me see, 74,82,000 into 0.6496. If I do that, I am getting amount close to 48,61,000. This is the contribution. And what is the fixed cost? 48,61,000. So contribution minus fixed cost, your profit is 0, and that's what we call as break-even point. So this break-even point in patient days calculation is also good attempt, because if this hospital is going to run for 3,741 patient days, and if it earns 2,000, it will have income of 74,82,000, but profit will be 0.